Welcome to Breaking News to Trading Moves.
Hey there.
We're here to look closely at the facts from Apple's Q4 2025 earnings report, basically trying to figure out which companies might benefit and maybe which ones could face some tougher competition because of it.
Yeah, we've been looking at the results they published and maybe even more importantly, their forward guidance, trying to see where things are speeding up and maybe where things might slow down for others in tech.
Right. The mission is pretty simple. Break down the key details for you so you get a clearer picture of what Apple's performance means for related sectors.
Yeah.
Chips, payments, media, that kind of thing.
Let's do it.
Okay, so let's start with the Q4 2025 numbers themselves. Apple actually beat expectations, right? Both on revenue and earnings per share.
They did, yeah. And they also highlighted record revenue from services, which is always a big focus. So overall, a strong end to their fiscal year.
But wasn't the iPhone revenue just a little lighter than forecasts for the quarter?
It was, slightly. But management addressed that pretty quickly. They put it down to supply constraints mostly, and also the timing of the new iPhone 17 launch. Honestly, the market seemed to look past Q4 pretty fast and focus on the guidance for the next quarter, the December one.
And that guidance seems pretty solid. They projected, 10 to 12% growth for the holiday period?
That's right, 10 to 12%. And the CEO was quite clear, even mentioning some softness in China. He still expects it to be their biggest December quarter ever.
Okay, so that's the key takeaway, setting the stage. That expected growth really helps us see who might win or lose from here.
Precisely. I mean, when a company like Apple guides for double-digit iPhone growth, you know the suppliers have to be ramping up production, big time. So the supply chain is the first place we look.
Okay, so strong iPhone growth expected. And they also mentioned good gross margins, right? So that implies they're selling a lot of phones.
Yeah.
And maybe the more expensive ones. Does that mean a richer component mix?
Yeah, that's a good way to put it. Richer component mix basically means they're using or planning to use more advanced and probably higher cost components. Think better cameras, displays, and definitely the connectivity chips, especially in the higher end models.
Gotcha. So it's not just more components, but better components in many cases. Who specifically benefits from supplying those kinds of parts?
Well, our analysis points strongly towards Broadcom, that's ticker AVGO, and Qualcomm, QCOM.
Okay, Qualcomm makes sense for the main modem chips. What about Broadcom?
Broadcom provides a lot of other key pieces, especially around connectivity. Things like Wi-Fi chips, and really crucial, the radio frequency, or RF parts. With that double-digit iPhone growth forecast, demand for these specific high-value parts should really pick up after Q4's supply issues.
Okay, so AVGO and QCM are winners on the component side. But strong holiday sales aren't just about factories. It changes things on the street too, right? Retailers, carriers.
Absolutely. When a big upgrade cycle seems likely, people head to the stores, or maybe more accurately, they head to carrier stores and websites. That means foot traffic and, importantly, activations.
People need to buy the phone somewhere, activate them. Trade-ins, installment plans.
Exactly. All that activity tends to funnel through the carriers and major electronics retailers.
So that puts companies like Verizon, ticker VZ, and T-Mobile US, TMUS, in a good spot. And maybe Best Buy, BBY, too.
Yeah, those look like winners. Management specifically mentioned seeing really strong store traffic and customer excitement for the iPhone 17 line going into the holidays.
And that usually helps carriers get new contracts or upgrades.
Right. And retailers like Best Buy benefit from the traffic, too. People buying cases, chargers, maybe other electronics while they're there.
Okay, hardware components, retail channels. Let's switch gears to services. You mentioned that hit an all-time high. That feels important, especially for anything involving payments or subscriptions.
Definitely. That's the ecosystem flywheel people talk about. Apple services subscriptions like music, iCloud, the App Store, Apple Pay. It just keeps growing.
We hear flywheel a lot. Can you explain for our listeners how that growing services business helps, say, payment networks like Visa, ticker V, and MasterCard, MA?
Sure. It's about the volume of transactions. Every time someone subscribes to something or buys an app or uses Apple Pay, there's usually a card, Visa or MasterCard, often linked to that account. So as more people use Apple services and spend more money within that ecosystem, it just naturally drives more transactions across those card networks. They get a small piece of that growing pie. They're sort of built into the plumbing of the App Store and Apple Pay.
Right. They benefit from the sheer activity, the volume of spending. Okay, that makes sense. Now let's flip it. Apple's success usually means tougher times for some competitors. Where's the pressure building now?
Yeah, the other side of the coin. When Apple does well, particularly in hardware, it often means they're taking share, or at least making life harder for rivals.
Okay, where do we start? Maybe PCs.
hmm
The commentary suggested the Mac was doing well going into the holidays. Is the Mac really big enough to pressure the main Windows players?
It is, but maybe not in the way you first think. It's less about overall market share domination and more about the premium end of the market.
Ah, the high margin sales.
Exactly. Macs, especially with their own chips now, compete very strongly there. They're likely taking some of that valuable premium share, especially during holiday shopping. That puts pressure on companies like HP Inc., ticker HPQ, and Dell Technologies, DEL.
So HPQ and DEL feel it most at the higher price points.
Oh,
What about wearables?
yeah.
Apple launched a new watch alongside the iPhone. Same dynamic.
Very similar dynamic, yeah. It's that ecosystem lock-in again. If you're getting a new iPhone, getting the latest Apple Watch feels like a natural addition. It makes you less likely to look at other brands.
Keeps you in their world.
Right. And that puts pressure on companies primarily known for smartwatches or fitness trackers outside the Apple system. Think Garmin, ticker GRMN, or maybe Fossil Group, FOSL. The integration makes it tough to compete purely on features sometimes.
Okay, so PCs and wearables on the hardware side. But you also mentioned services. It helps payments, but it must compete somewhere too, right? For our attention, our subscription dollars.
Absolutely correct. Services isn't just about making payments easy, it's about content. Apple TV plus sale Apple Music.
Yeah.
They're investing heavily there.
So more time spent on Apple's platforms means.
Less time and potentially fewer subscription dollars available for competing services. It's a battle for eyeballs and wallets.
Okay, so who feels that pressure? Which streaming or maybe connected TV companies might be facing a bit of a headwind from Apple's growing services scale?
Well, we'd look at companies like Roku, ticker ROKU, and Spotify Technology SPOT.
How so? Roku operates the platform, Spotify's music.
Right. For Roku, as Apple pushes its own TV app and content, it potentially draws users away from the Roku platform or reduces the time spent there. It's about controlling the interface and the content discovery. For Spotify, SBOT, well, Apple Music is a direct competitor in music streaming, and as it grows, especially bundled with other Apple services, it makes the competition tougher.
So Apple scaling services helps payment networks but can crowd out content rivals like ROKU and SPOT at the edges.
That's a good summary of the dynamic, yeah.
Wow, okay. So this one company's strong guidance, especially for December, and that ongoing services growth really does affect a wide range of players. Chip suppliers, retailers, payment networks, PC makers, other wearable brands, streaming platforms.
It really does. The key things to watch seem to be that momentum in the December forecast and the continued strength in services. When that whole ecosystem accelerates, it definitely creates winners and some losers across the board.
Well, hopefully this breakdown helps you process the key takeaways from Apple's latest report and see how these things connect across the tech landscape.
Yeah, absolutely. And just a standard reminder for everyone listening, please remember that this discussion is purely the opinion of the author of the underlying material. It shouldn't be taken as financial advice or any kind of recommendation to buy or sell securities.
That's right. Always best to consult with a qualified financial professional before making any investment decisions.